Vincent Chan, Head of China Research at Credit Suisse, and he joins us with his thoughts. So 7% CPI.
Possible. Now, okay, we don't have a very precise forecast on the peak CPI,
right.
But I think very likely CPI will rise in the next few months because the food price effect hasn't really passed. Food price actually hasn't dropped yet.
Really?
Yeah, no. For example, pork prices still rising, which is an important component. And more importantly, I think the CPI component is that non-food CPI this time is structurally much higher than last time. Service sector, wage costs, etc., etc. So the bottom line is that, though, however, the peak CPI this time will still be lower than the beginning of 2008.
Right.
But most important is the tail end will last much longer than last time.
But what about the interest rate increases? You know, the tightening measures that we've seen from the central government, price staples being basically you can't raise prices anymore. That's got to have some effect on CPI, right? 4%.
Nah.
Sounds dangerously high for the government.
I want to highlight 2 points.
Yeah.
Firstly is that the CPI is usually a lag indicator, which means that the economic slowdown today will only have an effect on the CPI. May not be even later this year, but maybe next year. And secondly is that the government has some price control on staple products, but usually the effectiveness of these price control are usually not very strong.
So are you expecting an interest rate increase this weekend then?
Possible.
Yeah.
Possible. Indeed, we expect about 150 bips increase in interest rate in next 12 months or so.
Okay, so what are you expecting then for those numbers on Monday? If it's say below 5.5, would you be surprised? Would that be
pretty surprised? I think the CPI will be higher than last time.
Than last time.
Than last month, I mean. Yeah.
Than last month. Okay, so expected for 5.5% then. Let's talk about trade numbers.
Yeah.
What are you expecting? What would be an interesting number to you for trade figures?
I think the most important thing to look at is export growth. Rather than I'm not so concerned about the trade surplus. This is more secondary variables. It's export growth that really matters because we will expect China's investment growth to start slowing down. Local governments' cash flow start to running dry with the weaker land sales and the tight credit position. So a very important part of driving the Chinese economy right now is export growth, which was very strong in the first few months. But with the weakened global economy, I will expect export growth to start to show signs of weakening. Weakening? Yeah.
Okay.
It will be weaker than in the last few months.
Well, let's talk about the stock market reaction because we've seen Shanghai been on a slump for a few sessions now. I think down 10% from its peak so far this year. And they say in terms of indicators, you know, the stock market is a leading indicator of the economy. So what does that say to you? Are we going to see this slump continue?
To a certain extent, I think the weaknesses of the Chinese economy, relative weakness of the Chinese economy will continue. This is what the stock market is saying, really loud and clear. Surprisingly, however, if you look at the global commodities market, it's talking about a different story. So this is quite interesting. I personally think that the stock market probably is a better indicator than the commodities market this time.
Oh, really?
Yeah.
Okay, so how long do you expect the stock slump to continue in Shanghai?
Given the valuation of both Hong Kong for H share and the Shanghai A share is quite low. Yeah. They are all around 25 to 30% below their long-term average already. So I don't think really they drop too much. Okay. Indeed, from a 12-month horizon, they may actually have some upside.
So you're saying buy because they're cheap?
They are cheap, but in the next few months they may not have much going up. Well, it's kind of like if you are really in long term, fine, buy now. But you look for a performance in the next few weeks. Not necessary. Okay.
Vincent, thanks for dropping by today. Have a good weekend. Nice to see you as always. Vincent Chan of Credit Suisse.